Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me for this segment, we have Michele Raneri, Vice President of U.S. Research at TransUnion, to discuss the TransUnion second quarter credit industry insights report and the state of consumer lending, inflation, and debt. Michele, it's great to have you with us. Welcome to TradeTalks.
Hi, thanks for having me.
You got it. And let's talk about the consumer population as a whole, as it relates to Gen Z. How are they approaching their consumer behavior as it relates to bank cards and personal loans?
Yeah, so it's interesting. Gen Z, we're seeing are using credit a little bit more. So as they come of age, they're starting to use more credit. We did a consumer survey and found that 50% of Gen Z population said that they're going to expand their credit over the next 12 months. So that means get new student loans, get new mortgages, get new credit cards, or even auto loans over the next year. And that 50% of them said that they're going to expand it, but only 32% of the rest of the population said that they're going to get new credit over the next year. So Gen Z is really planning on outpacing new credit compared to the rest of the population.
Michele, do you think that could be a challenge for them as underwriting has begun to tighten a bit here?
Well, that's a great point, because you're exactly right. Underwriting, when you say that it's tightening, meaning that it is harder for people who have subprime or damaged credit to get new credit right now. So people who have had subprime credit scores are finding it a little bit harder because the new loans are going to prime and above consumers. And sometimes consumers, when they're younger and just starting out their credit experience, they may not have great credit. And so it might be a little bit harder for them to get credit, even though a lot of them want to expand it in the next year.
And bank card balances, I mean, I understand they're up over $1 trillion at this point.
That's right. Bank card balances continue to grow. People are still using bank cards significantly. And so as we look at that, we know that the pressures that we have with inflation and with increases in interest rates are definitely being felt by consumers across the board. And so they look to credit cards and use credit cards as kind of a valve or a bridge to get them through this time.
Do you think that's a function why we're seeing this increase? I mean, Gen Z, it's understandable. They're starting to exercise their purchasing power. They're thinking about like buying homes and autos. Is it largely a result of, okay, we know savings have dwindled down. We know we're no longer getting stimulus checks. Student loans are going to have to start to be repaid. It just seems as if there's a lot more pressure on the consumer, and there really isn't a benchmark to this since going through COVID and, getting these types of stimulus checks. It's not something we've been able to benchmark against in recent history.
Yeah, you're right. And so I think that's where people are trying to do what they can in order to supplement their cash flow. And so that supplement might be by using a credit card. It might be getting an unsecured personal loan, just an actual loan also. But the other thing is with interest rates high, people don't want to use too much credit. And so they're also looking at things like home equity lines or loans and borrowing against some equity in their homes, because that might be a little bit lower of an interest rate than getting, say, an unsecured personal loan.
And Michele, what's your best advice? Let's say you've maxed out your credit and it's just unsustainable. You can't keep up. You can't even make the minimum payment. You can't keep up with the interest rates. Expectations are that they're going to be higher for longer. What do you recommend to consumers if they just don't have the cash flow to support their credit balances?
Yeah, if you don't have the amount to pay on your minimum payment, then contact your lender and see if there's something that you can kind of work out. Sometimes they'll recommend doing a consolidation loan, and a consolidation loan might be a personal loan that can be at a lower interest rate than, say, credit cards, or it might be that home equity line or loan. The other thing that I'd recommend is that during these unprecedented times through COVID and through some different ways of getting and spending money, that think about what your habits are right now. So think about what you've been doing over the last couple of years, and maybe you need to make some changes. Maybe you need to think about a budget and curtail in some areas so that you can afford that lifestyle again and not miss minimum payments.
And finally, was there anything else in the second quarter report that stood out to you?
Yeah, that overall, we've still got some higher delinquencies. And so thinking about what you just asked of what do people do when they can't afford to pay all of their minimum balances or minimum payments, that we're seeing those delinquencies rise in a lot of areas. And so I want to make sure that people are thinking about their purchases when they're making them so that it doesn't come down to what are you not going to pay in your bills this month.
All right, Michelle, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thanks.